Everybody, this is Jim at SP500chart.com. It is kind of late, about 11:30 on Thursday evening, January 24th. Sorry about the lateness of this video, but it happens from time to time. I'm going to do this pretty quickly because it was basically a flat day, but some things happened that make us wonder, maybe give us a clue about what's going on. But before we get started, I just need to remind you, as is always the case, that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm still not a licensed financial professional, but I am just a guy who draws lines on charts. Let's do it. Okay, we are looking at a 30-minute chart. Tell you what, let's back off. Let's make it an hour chart because I want to remind you about this top resistance line and this bottom support line and this intermediate line that we've been watching. Sometimes, guys, you get channels within channels. And I think we kind of have that going on maybe 3 different levels here. I would expect this line on any sell-off, and it would take about a 3.5% sell-off in the market, which is not that much. But this line, I would be looking for it to probably give good support. So we would, if we were to approach this line, then we would look for something similar to what we saw back at the end of December, where we came down in a channel that lasted a little bit more than a week. Then we broke out of that. Of course, we had the big gap up on January 2nd. And since then, we have also been traveling in what may be another channel, which I have a red line down here for the bottom. I believe that's a pretty solid line. And then we have played with what is going on with the top boundary. And it for a while, it looked like a wedge. I thought it was a wedge, but obviously it's not a wedge because it's not acting like a wedge. It looked like a wedge, but it's not acting like a wedge. So in this case, it looks like a duck. It quacks like a duck, but it's a cat in a duck suit. So it's something else. And if we look at it on a 15-minute chart, a couple days ago, I'll tell you what, I'm just going to remove that line. A couple days ago, I took this bottom line and I said, well, what happens if we create a parallel line and then move that to our tops right here? Well, we ended up with an almost parallel channel that so far we have not gotten over this line right here. And as a matter of fact, you know, I could even adjust this line a little bit like that. And if I did that, this line would probably be very close to being, come on, still not perfectly parallel for what we saw as the high today. Then, in addition to that, we've got, I mentioned this top turquoise line and this bottom turquoise line. Today, the S&P absolutely surprised me. And I bet it surprised you too, because we're looking at Apple just getting pummeled all day long, down 10, 11 and a fraction percent. I mean, really taking it on the chin. Apple makes up a huge portion of the S&P, and yet the S&P was up. However, it did start down, but then quickly got back into our little gray channel here. See? Let's look at it on a 5-minute chart. We kind of broke this range where we were held under 1470, broke that, pulled back a bit, then started a channel that lasted 3.5 days. With the exception of that open this morning, and I want to take a closer look at that because sometimes free stock charts gets their data from the BATS exchange. Sometimes there's an erroneous starting point. So I'm going to find out exactly what the actual official open was. But to make a long story short, the S&P appears to have opened lower, but then quickly get back into this channel, make two tags on the top line, get very close to this red line, and then it came down and broke that 3.5 day long channel. And we ended the day with a return to our top resistance line that we broke over the top of. Now, remember, when you take out a rising resistance line to the upside, there is no guarantee at all. There's no even real propensity necessarily for that line to serve as support once it's taken out as resistance. Now, if it's a descending line, it does that. So remember, that's one of the technical analysis kind of a rule of thumb, is that support once taken out becomes resistance. Resistance once taken out becomes support. And we can talk about that at some point, but that there's very clear and easily understandable psychological reasons why that happens. I won't go into it right now because it's getting late and I want to get this video up. But to make a long story short, took out this 3.5 day long channel, came back to that resistance line that got taken out this morning, didn't provide support because you can't count on it to provide support. Then it looks like, at least late in the day, for what it's worth, for a roughly 3 point move, this line once again seems to be, that's such a small dip down from that level, but this line is where the markets started to head back down, but only for about 3 points. So, if I was a betting man, I would expect now a return to this bottom red line. And if this line breaks, then I would expect a return eventually back down to 1440. This market needs a breather, guys. It really does. The longer we continue to go up and up and up, kind of just in this little melt up thing, the more pent up selling pressure, when it finally does break, it will probably break and be pretty ugly, because you need to take a breath every now and then. Look, I'm not a good swimmer. And my problem when I was learning how to swim was that I could not exhale efficiently with my head underwater. So I would do the freestyle, and I would pull back my right arm, take a big breath, get my head back in the water, and exhale maybe a third or a half of it. Then I would get my head back out of the water a stroke or two later, and I would take a big breath. But this time my lungs were half filled with stale air. So I would take a big breath, get rid of a little bit of it underwater, then I would do that 5 or 6 times, make it 2/3 the way down the length of an indoor pool, and I would just have to stop and finally go and let out all that stale air that had collected in my lungs. So I use that as a possible illustration for, if this market does not take a breather, then it's likely going to stop and just make a big exhale where a lot of selling will take place. So, guys, that's the video for today. And I appreciate you being patient with me. The moral of the story is, as it has been for the past week or so or longer, watch the red line that I've just highlighted. If you watch this line and you're antsy about taking gains and you didn't take them today, then watch this line. When it breaks, we are likely heading back down to 1440. If we do head back down to 1440, then we're likely going to bounce there because we got two reasons to. We got either this line at 1440 or this rising support line wherever it may be when such a move were to occur. It could be swift enough. We could end up there next week. I'm not going to guess on that. For right now, watch this lower line. When it breaks, I think that's your first hint that we are going to be in all likelihood setting up a few days of probably fairly significant selling pressure. So guys, that's the video for January 24th, 2013. Thanks for watching. And I also want to thank you for being a subscriber. If you're not and you're seeing this video and it's not Thursday, but if you're seeing it a couple days later, you can get these available to you after every day's close on a timely basis without the delay. Because what I do is I do a Monday, Tuesday, Wednesday, and Thursday video that are released on Monday, Tuesday, Wednesday, and Thursday for subscribers. If you're not a subscriber, then when I do the weekly update, the weekly review, and the Friday update, I release all videos over the weekend. So then I do that because I want to be accountable to you guys. I don't want to just release the success stories. I release every video that I have done uh, on charting the S&P 500, and you can take a look at it and see for yourself whether or not this kind of technical analysis works. So look, guys, thanks for watching. Take care. If you want to think about subscribing, sp500chart.com. It's a grand total of $19.95 per month. Thanks. Take care.